Hey guys, just Dante here. So today I'm going to be talking about how to actually build your credit score up from the 400s with like real advice. A lot of people, dealers will tell you, sorry, you got declined, and they never give you some sort of game plan to actually get out of that situation. So I'm going to kind of give a breakdown of what I would do and what I'd recommend. I was never really in the 400s. Lowest I ever got was 599, but the first thing that I would do, and I always tell clients, is have access to both of your bureaus. So you can pull actual bureaus from TransUnion and Equifax, but I think you need an Equifax membership to pay for it. But there's an app called Borrowwell. So I tell my customers all the time, Borrowwell, this is going to show you your Equifax score. So Equifax is one of the credit bureaus that banks, lenders use to determine if they're going to approve you or not. So when you have like an awareness of this thing, of what your Equifax score is, it's gonna make life a lot easier for you because you're gonna actually see where you're at. A lot of people want to grow their credit score, like I'm talking about, I'm building my credit score, but you don't have Borrowell. You don't have the things measured in place to see where we're actually at, right? How do we know where we're going if we don't know where we're at? So I always tell this, like every client, every lead, if the situation's cooked at that time when I talk to them, I'm like, you gotta download Borrowell. You have to get this app. This is the first step. Knowing that is the first step. It's a free app. It's gonna ask you to provide some basic information so they can verify that it's you. Now I've had some instances where customers will say they cannot recognize or they can't find your account. A lot of times it has to do with the fact that they don't have any credit, so it's hard to pull them up. But these apps usually offer some sort of solution, so you can reach out to support. I don't know the exact steps because like when I signed up on Borrowwell, I got in just fine. I did have previous credit though. I had credit cards from when I was like as soon as I turned 18, I got my first credit card. Um, but I didn't have an issue with that. But some people do. But if you're really serious about figuring out your credit, you're gonna call up whoever you gotta call up. If you're gonna give up, well then this video is realistically not for you. If you're actually serious about building your credit, then continue watching. Now, what I would do after once I know my score is, first of all, I don't know, everyone has different situations, but let's say you had late payments, because those are killer. Whoops. You have to stop making late payments. So if you have credit cards already or some sort of installment loans or personal loans or whatever credit lines you have to stop making late payments. Now, yes, I know it's very different times. People have different income situations. I can't speak on everybody's current circumstances, but if you know yourself, like, okay, am I spending money on smart stuff, like smart things? Like you know, I don't know everybody's bills. I don't pocket watch. I'm not concerned about that, right? I don't sell. I sell cars. I don't really sell financial advice, but I want to, portray myself in this space as a trusted authority, right? To give advice of actually being able to improve your situation so you could in the future get a car. I'm not saying dedicate your whole life to just building your credit to finance a car. Building your credit, just the beautiful thing about it is not only does it open opportunities in life, but once you get to that point with a decent credit score, you know how to get there and it's easy to maintain as long as you keep the same habits. But you have to stop with the late payments. Like no more late payments, bro. Late payments, done. You gotta stop. I'm not a really big fan of auto payments. Like if you are, consistent or sure you're gonna have money coming in every time, same amount, and it's like you're more disciplined on what you're spending your money on, okay, cool, do auto payments. I like manual personally. I like to manually just pay things off. When you click on your credit card on your banking app, if you have one, it'll show you your statement date, your balance, all that stuff, so you can know when to make that payment. But if you want to do auto pay, you could go that route. But the most important thing is you have to stop making late payments. You have to. If you've already been making late payments, I don't know how other banks work, but I know with Scotiabank, because I had that issue, I couldn't get like a credit limit increase because I think I had like a late payment. and I couldn't do that for another year. So I had to make payments on time for a year straight. Because you got to keep in mind, this is not an overnight thing. This is not an overnight solution. It's something that you're going to have to be willing to put time in. But like I said before, once you build a credit right the first time, you know what you did to get to where you got to. It's going to be much easier to stay in that position. So you got to stop with the late payments. Once the late payments are dealt with, next thing, this is if you have it might not apply to you. But we'll say, let's say you have collections. We're talking to people who have collections. You got to deal with this. You got to deal with this. I don't know. Everybody has different collections. I've seen family responsibility collections for $50,000, $60,000, which is like unpaid child support. There's all types of collections, gym memberships, car rentals. I've seen it all. But you need to deal with those strategically. Start off small. Start off with the ones you can pay off sooner. Yes, collections stay on your report for around 6 to 7 years, but what looks better, having an unpaid collection or having a paid collection, right? It just makes things look a little bit better in terms of the lender's eyes. So deal with your collections. Start with the small ones, then tackle the big ones. I know you're like, oh, it's going to take me a while to pay these off. Whatever other things you might have been prioritizing with your money, aside from the bills you need to pay, you need to allocate that towards getting your collections dealt with. You have to. You can't be worried about going to Netflix and the club and all that. Forget all that. No vacations. You can't be doing all that. If you're really serious about building your credit, you got to handle all your collections. You got to handle that. Because it's like, okay, cool. Once you pay it off, it's paid off, right? The thing is, they stay on for 6 to 7 years, but after that, they should be coming off. If they don't come off, you can always dispute it, get it cleared off. But for the most part, they do usually come off. And you get that fresh slate. Now, once your collections are dealt with, if you have collections, you need to build positive credit now. So there's so many different examples, but there could be people that have had credit cards that were in high status, like super behind payments. With collections, it's kind of similar. Like you want to bring that back to a current status. Like you want to bring that back to like a decent status. So you're currently actively making payments, you're paying on time again. Whatever missed payments you had, you're caught up with. You need to start building positive credit again. So this is if you already had a credit card. Now let's say you don't have a credit card. Okay? You don't have a credit card, you need to get a credit card. You need to. Now if you're in the 400s, you're going to probably have to get a secured credit card. So what that means is, in order to get credit, you need to put a deposit. So usually what your deposit is your credit limit. So they need something to collateralize, if that makes sense. So if you want $1,000 credit limit, they want $1,000 deposit. And then once they see you're using it, you're paying it down on time for a certain period of time, they'll eventually give you maybe an unsecured where you don't need to put a deposit, and now you have a credit card with a certain limit. But you still need to use it the same way you're using it when you did have to put a deposit. Same thing still applies. So I said the same habits you had to get out of the situation is what's going to keep you in good credit standing. Just having those same habits, paying stuff down, keeping the utilization low, which is going to lead me to my next point. Now, getting a credit card, there's a lot of providers out there. I have a couple of links that I'll send to my customers. If you're in the trenches, like 400s, there's Neo. Oops, see, it shows the whole thing. Neo, there is Koho. I'm just going to put the K0 because I don't want the whole. I have like a text shortcut. So basically when I type it, it shows up Canadian Tire. Okay. And then I'll usually send like Walmart. I have like 4 links. So those are 4 options you can start. Walmart, MasterCard. These all report onto Equifax. It's somewhere to start off with, right? It's somewhere to start off with, somewhere to build credibility. When you're in the trenches, when you're in the 400, it's hard, but it's like you got to start somewhere. If you don't take that first step, who's going to ever trust you with credit? Now, you might have a different situation. Maybe you're at the bank, you're with a chartered bank like Scotiabank, CIBC, TD, one of those bigger banks. There's a possibility that you can ask for like an unsecured version of their credit card. So you have like a big bank credit card, but you got to put that deposit. You could possibly try to negotiate for that with your financial advisor, see if that's an option. But if not, then these four right here, might be your best bet at that current moment until things start to improve. So once you get closer up to the 500s, 600s, you probably give it a shot. Now, when it comes to applying for credit, you don't want to apply everywhere. So you need to be strategic, okay? And you need to choose one option. Don't try to apply for every single card, because realistically, lenders are going to see that on your report and they're going to think you're desperate for credit. Lenders don't want to give you credit if you're desperate for it, because they're like, why do you need credit so bad? Are you going to like max it out? So choose one option that, look at the rewards, look at the benefits, look at how they operate, do your due diligence, do your research. I can't research for you. You got ChatGPT, you got Google, you got website, frequently asked questions. Do your research on what option makes the most sense for you. But these are just the four options that I at least try to give my clients, if I can't help them at that time, to kind of slowly do some discovery on what they want to do. Choose an option, apply. Now, obviously, when you apply, yes, they're going to have to check your credit, but you got to take that risk. There's a degree of risk that you're going to have to take when it comes to building your credit score. Same thing with applying for a car loan. There's no guarantees. But what's more painful? Staying in the same situation, bad credit, no opportunities to maybe get the car you want, eventually get a house, whatever your goals may be, or taking that risk trying to improve your situation. Which one's more painful? So, you got to have the mindset for that. But once you kind of figure out an option of what you want to go with, you apply for it. Okay, let's say best case scenario, you get approved. Congrats, you're approved. Cool. Now you have to keep the same habits. Once you get this card, no late payments. No late payments. Oh shoot, I copied the arrow. Whatever. No late payments. You have to keep the good habits, guys. Once you do this for a long period of time, you're going to see your credit score go up. But you're going to see probably an improvement after 12 to 24 months. Me personally, in about April 2024, I was at like $5.99 on Equifax, and now I'm sitting at $7.30, and we're in November of 2025. So it does take some time, but it's possible. You just have to be willing to put in the work. Like having good credit is just better. It's just better peace of mind. It's just you have more opportunities to do stuff. If you want to get a car, I'm not saying dedicate your whole life to just financing a car, but not everyone has cash. Not everyone can drop 20, 30 grand cash, 40 grand cash, whatever car you want. So I'm just trying to cater to, the average person looking for a vehicle. I don't work with super rich people. I specifically deal with people that have less than perfect credit, but I'm getting a game plan of how to get out of that situation. So you could have better opportunities, better approvals, better car options. Because that's the beautiful thing. When you have better credit, you have better car options. So once you get this point, you just have to continue to grow your credit, keep managing, keep monitoring it. It's going to notify you. That's why I love BorrowWell. It lets me know credit score went up, credit score went down, and why. And one of the biggest things is not only late payments, but it's also your credit utilization. So what that is basically, that is how much credit you're using out of all the total credit you have. So your total credit divided by the credit you're using. Okay, that's going to be your utilization. So let's say you have 10,000 total credit. Okay, and you're only using like 1,000. Oh, actually I flipped it. I gotta do it the other way. Hold on. Whoops. Whoops. Okay. Cool. Credit utilization. Where's the arrows? Boom. This needs to be like, they say less than 30%, but you want to be like 10%. So if we do the calculation, it's really easy to pull a calculator on my MacBook. Do 1,000 divided by 10,000. Okay, 0.1. You times it by 10%, times 100, that's 10%. That's a 10% utilization. This is the sweet spot where you want to be at with credit utilization. This is what's going to make your score jump. This is what brought my score up, right? The reason that I had low credit, to be honest, like I got this course and I put on credit because I didn't have that at the time, but I knew that getting the course would help me learn skills to make more money. But anyways, long story short, I was paying down that course, so my utilization was high. But eventually I paid it down, it started to drop, my score went up, and now I'm kind of just sitting in the same area. I don't really drop too much nowadays. Yes, it'll move five points up and down because of utilization, but this is what's going to get you out of that trenches. It's going to get you out of there. And there's another thing that you have to do as well, which is increasing your credit limit. So let's say, for example, right, I have 10,000. I have a 10%. So I have 10,000 credit. I'm using 1,000. I have a 10% utilization. Okay. Awesome. Great place to be at, especially on a consistent basis. Super going to help your score. Now, let's say I get a credit limit increase on one of my credit cards, and now I'm at 15,000. So that just dropped my utilization to, and if I'm still using 1,000, because you don't want to start using more, I divide that by 15,000, times that by 100. I have a 6%, 7% utilization. That's going to make my score go up even more. So that is the name of the game. In the simplest terms, no late payments, make your payments on time, and keep your utilization as low as possible. Okay? Keep credit utilization as low as possible while still increasing your credit limits. That is the secret. Whoops. My keyboard shortcuts are cooking. Increasing your credit limits. That is the name of the game. This right here. That is the key. This is going to get you out of credit, bad credit. I've done it myself. If it's going to work for me, it's going to work for other people too. The most important thing is you got to get positive credit first. You need to get either a new credit card or talk to the bank they're with to get a secured credit card. But you need to get credit. And you need to continue to figure out ways, how can I increase it? And you need to continue to keep your utilization as low as possible. Don't start paying for more stuff and then letting it run up and then maxing it out, because then you're just going to go back to square one. Try to keep as low a balance as possible while increasing the limit. That is what is going to get your credit booming. Other than that, as long as you're doing that, you're monitoring it, don't delete the apps. I've had customers say, I had it, but I deleted the app. Why would you do that? There's no point in doing that. Keep the app. And there's credit cards that you can get approved for. You don't have to use them. The bank's not going to close them. It just makes you look even better. Like, wow, this guy has so much credit. He barely, every time he uses it a little bit, he pays it off. We trust him with this credit. Don't think that you got to change your mindset when it comes to getting credit. Don't think that when the bank gives you a credit limit increase that you need to use it all. No. They trust you, but you still need to manage your money well. That's the whole point. The whole point of not getting a credit limit increase is not to use that full limit increase. No, that's the opposite. That is a secret to building your credit. So hopefully you guys learned something from this. You want to book a call? I'll explain more information, get more in detail about it. If that, helps you get closer to getting approved on a car. It's very simple information. You just have to be willing to put in the work. That's the thing. It's going to take time. It's not overnight. You might watch this video this year and you might hit me up next summer or 2026, whatever, or 2027. Like, it takes time for everyone to put in the work and stay consistent. I promise you will see some results as long as you do the right stuff. So hopefully you guys enjoy that video, and I'll see you guys next one.